Hello and welcome to CMS Forex News. I'm your market analyst Nick Nassad. Today is Wednesday, May 27, 2009. The Japanese trade surplus was a seasonally adjusted 68.9 billion yen in April as the decline in exports that has been dragging down the economy began to slow. Exports fell 39.1% compared to a year earlier, which was less than the 45.5% drop experienced in March and a record 49.4% decrease in February. That can mean that the worst of the pullback in global trade may have passed, and exports to China, the US, and Europe all fell at the slowest pace this year. The Aussie-Yen pair finished off its rally yesterday by setting an intraday high at the 75.20 area, pushing above the highs seen last week. Still, the pair was unable to garner much of a move afterwards and reversed its gains as the session wore on. Support was established at 74.50, but then in late New York trading, the pair broke below that to fall to the 74 area. Though stocks were higher in Asia and Europe, equities in the US fell, which caused a decline in higher yielding pairs. UK mortgage approvals rose to 27.7 thousand for the April period, a figure that was higher than in March but lower than expectations. Also, mortgage lending amounted to only £2.7 billion, falling to the lowest level in 8 years. Now, mortgage news did not set back the pound as it climbed above the 1.60 level against the dollar for the first time since November. With speculation that the worst of the financial crisis may be over, investors are now looking to buy assets denominated in the British currency. The pair surged almost 800 pips last week, breaking above the 1.55 level, finding resistance around the 1.5950 area. Today, that resistance was broken. The pound moved higher against the yen as well, breaking above the 151.50 level, which was resistance so far this week. The pair climbed about 180 pips and set a high just above the 153 level in New York afternoon trading. In a third look at a pound cross pair, the euro-pound fell more than 100 pips from its open near 0.8780 to settle low at the 0.8650 area. That is a volatile move for this pair and puts it at its lowest level since February 10th. Support back then was at the 0.8460 level. In the Eurozone, German consumer inflation was flat in May compared to a year ago and was down 0.1% on the month. It's the first time since German unification that the annual rate has not been positive. The harmonized CPI, which is calculated for European comparison, is expected to show the annual rate actually turning negative. In the US, existing home sales rose by 2.9% in April to an annualized rate of 4.68 million homes, the second month out of 3 that sales were higher, as bargain hunters took advantage of low prices and foreclosure auctions to purchase homes. That is an indication that the market may have reached a bottom in terms of prices, which should result in higher sales going forward. If that is the case, then there's a chance that the current glut of unsold homes can dwindle, helping to end the slump in property values. Housing prices, meanwhile, in the U.S. were down 1.1% in March, the biggest decline since November. For the first quarter, prices were 0.5% lower compared with the fourth quarter, though that was much less than the 3.3% drop seen in the fourth quarter compared to the third. The euro-dollar pair followed up yesterday's back-and-forth session with a move downward today, falling from 1.40 to open the session to set an intraday low near 1.3870. There have now been 3 days in a row of lower highs for the pair, suggesting a new downtrend could be in the works. Still, we may be seeing just a consolidation or sideways trading following strong gains in the pair last week. The euro was down against the Swiss franc as well today, sliding about 60 pips from its high to set a new weekly low at the 1.5110 level. After stalling in Friday's trading, the pair has been down the last 3 sessions, effectively wiping away the gains in the pair seen last week. The 1.50 level is very strong support for this pair, as the Central Bank of Switzerland has let it be known it will intervene in markets to make sure the franc does not appreciate against the euro. Tonight, Japan will release its retail sales data, while Australia posts data on new home sales and capital spending, and also reveals its Conference Board leading index. Overnight, Germany posts its unemployment change, and the Eurozone reveals its end-of-the-month confidence indexes. Continuing overnight, we will also have trade data from Switzerland and a measure of retail activity from the UK. Tomorrow, the US posts releases on durable goods orders, weekly jobless claims, and new home sales. And that wraps up today's broadcast. Thank you for joining us here at cmsfx.com, and happy trading.